Hello, I'm joined by Paul Hamer, CEO of WYG plc. Paul, welcome.
Yeah, hi.
Could you please start by giving us an overview of what it is that WYG really does?
Yeah, sure. Consultancies can be quite complex beasts, and we've managed to distill our offering down into just two very distinct and specialised areas. In the UK and Europe predominantly, we are focused on asset creation. This is where we sit strategically with our clients and helping them visualise a new asset and managing the process until that asset is created and they start to get a return on investment. A simple example would be working with Sainsbury's. We help Sainsbury's look at their 10-year store rollout plan. We find them land, get them approvals with an aim of getting food on the shelves as quickly as possible. That's predominantly a UK service. Outside of the UK, our core second area is international development. Essentially what we're doing there, we're working with UK and European government predominantly, and we're trying to do two things. One, we're trying to help rebuild fragile states, so former Yugoslavia, other parts of Africa where we've seen some turmoil, and our other aim is to reduce poverty. So we're involved in climate change resilience, agriculture, education, health, to really try and raise the third world up in terms of standards and living. Those are the two key things that WYG does.
Since the recession, the depths of it in 2010, 2011, the business has undergone a real turnaround. Can you tell us how much progress you think you've made and how much further there is to go?
Sure. The turnaround journey has been a very difficult one, and we had to put the business through quite a lot of pain, but it was necessary. It was mainly the UK that bore the brunt of that pain. The business had grown too large. Its focus was on being big rather than being great. And predominantly, when I arrived, the business was an engineering consultancy. I decided that that was high risk, very commoditised, so we decided to exit that market. Essentially, we shut off about 60% of the group's revenue and focused and moved the business up to the front end of the value chain. The risks are smaller, the potential margins are higher, and it allows us to engage with our clients earlier. We started that in 2011. I think where we are today, that turnaround is finished. And we've seen the profit benefit from that, but we're clearly now in growth mode, both here in the UK and internationally. Our whole focus is now on growing quality revenues to drive our profitability further.
And thinking of UK compared to international, what do the two divisions have in common?
There's a golden thread between the businesses. So the UK is the heart of our skills and expertise, but it's also the heart of some true, very deep, intimate relationships. And the way that we grow our international business is probably very different to other businesses. So what we tend to do is we export our UK skills into our international arenas, and over a period of time what we're trying to do is build mini asset creation businesses, which is predominantly what we do in the UK. Outside of that, we tend to follow key UK clients as they move and develop into other areas. So whilst people will see us doing a lot of work in, say, the continent of Africa, what they should realise is 99% of that work is for UK or European government. So we don't have any issues about transparency of business, cash repatriation. We're under contract with the UK government. So there's a real surety about our international expansion. It's that golden thread that allows us to build our business probably very differently to the way that other global consultancies build their business.
I see. And in terms of the EU, you've got a leading position in that market. Can you tell us a bit more about that?
Sure. We've been market leader with the EU in international development for about 5 or 6 years. The EU ostensibly is trying to do two things. One, it's trying to help countries on the EU accession path meet standards for hard infrastructure. So this would be roads, hospitals, schools, water, etc. Now, many consultants would be able to provide that type of advice. However, each of the EU contracts also comes with a second element, which is social consulting, because at the same time, the society has to come up and meet EU regulation, and therefore, essentially what we're doing is we're writing governmental policy to implement vocational education, improve AIDS awareness and education. And as an example, a project we're doing in Turkey at the moment is working with migrants who are coming into the very large cities like Istanbul with children. And not only are we making them aware and helping them integrate into society, we also monitor them and look at the child's progress and their progress as we try and see if we can integrate them further. So it's very diverse. But what's key for us is that the barriers to entry are extraordinarily high. Very few consultancies can do social consulting as well as hard infrastructure.
Thinking of other international development, you got, as you said earlier, some business in Africa, largely with people like the UK government.
Yeah.
Can you tell us what kind of projects and deals you target in that context?
Sure. Again, it's an international development pursuit. So we don't do any local business because, as I mentioned before, we want surety of the sort of commercial arrangements that we operate on. Essentially, in Africa, we're focused on two things. Poverty alleviation, so again, eradication of famine, making sure that people have got clean drinking water, sanitation. For the more developed countries, it's about stimulating business, so SME education, looking at startup, how can we provide investment and finance. Probably a more specialised arena that we've moved into over the last 2 years is supporting UK government in fragile states. So we followed the Ministry of Defence from the UK into Afghanistan, where we've been supporting them from an infrastructure perspective. And we recently won a project with the Department for International Development in Libya, where we're helping them look at security and justice in that region, again, to try and stabilise and improve it. Again, the key thing to note is very specialised, high barriers to entry, and we're experts at it. So we pick our markets very carefully.
Does the major projects team have the same kind of remit in terms of style of project?
Yeah, I think when I came into the business, one of the things I observed is that we didn't have governance that was strong enough for the type of business that we operate in, which is a global business. And as the project started to get larger, more complex, it became apparent that we would need a unit that would be able to help us to project manage and coordinate all the logistics of those very complex projects. That's why we made the investment in creating a major projects unit, and that team's job is to source complex opportunities, to make sure that we find partners we can bid with, they bid and win them, and then they're also responsible for the mobilisation and delivery. So it's an added governance to make sure that as our business grows, we still retain the focus on driving delivery through the organisation.
I see. And what do you say are the most important opportunities and perhaps threats for WYG?
I think the opportunities for us really is in, although the UK market is very good and we expect our business to grow 8 to 10% a year organically over the next few years, we would say that it's the international development market that poses the significant opportunity for us. Just the sheer scale of the ambition, some of the global needs around health, education, energy, those types of things which are critical to national infrastructure. So I think it's going to be an international development where our largest opportunities are. In terms of threats, the threats that we look at, I mean, there's always political change and funding that you look to mitigate, but for WYG, we've generated almost more opportunity now than we can service. And actually, therefore, the threat is losing our focus, which has driven our reputation for being excellent at what we do. And hence, that's another reason that the major projects unit is there, to make sure we don't overpromise and underdeliver. We're very much in the underpromise and indeed overdeliver.
So you've set yourself some pretty ambitious targets for 2018. Yeah. How are you going to get there?
Yeah, it's on the back of prudency and visibility. We've always been a prudent management team. We've got an identified pipeline of opportunities now that total more than 300 million. That's just the projects we can see today. And that pipeline will grow as those projects come on further. So the scale of the opportunity that we've got, the market position and differentiation that we've got, and it's against there where we expect all parts of our business to grow. And actually the targets that we set were stretching, but very deliverable. And actually, if we would have put all our opportunities into the pipeline, the targets would have been considerably higher. So that's why we think they're ambitious, but also they're very prudent in terms of what we can deliver over the next few years.
Good to hear. Paul, thanks very much indeed.
Thank you much.
If you'd like any more information, please visit the Edison website.